You didn't press it. Oh,
I did. I pressed it. There it is. Hey, we're live. It is episode 25.
25.
Is that like our silver anniversary?
Yeah, what'd you get me?
Nothing. I got you some FUD. So you can go FUD
A
yourself.
whole box of it.
So JD Gagnon here, my good friend Kiara. How are you?
I'm so great. How are you on episode 25?
I am fantastic. It kind of feels like it hasn't been 25 episodes, which is kind of cool. It'll be exciting when we get to like 300.
1,225.
Yeah, that'll take a while, actually, like 5-6 years. Like, if we're still doing this, that'll be good, I guess. If we're still doing this in 5 or 6 years, then that means people actually cared and paid attention. So let's go. Anyways, what are we talking about today?
Today, we're going to talk about DeFi insurance because people want to know everything there is to know about DeFi insurance and how they might qualify for it. We're going to talk about the international crypto arms race, which is my favorite topic that we talk about every day. It's kind of like regulation under a blanket. And then we have two fails, two things that we maybe mistakenly reported on, one being Bitcoin and one being Euler. Are you ready? Are we missing anything?
Nah, let's do it.
Go. Okay, so DeFi insurance. I don't know why this is so big today.
Yeah, insurance is always an interesting one because, I mean, when things go bad, when things go sideways, as they have for the last year, everybody's like, oh, we should have had insurance. Where's all the insurance? Why is my insurance not paying out? When things are going well, people don't think they need insurance. And so they're not buying insurance often. So anyways, yeah, it's in the news, obviously. Terra Luna was a big one. There's been a lot of exploits and hacks and, weird things that have happened over the last year that have launched a lot of this into the spotlight. But I think, the amount of exploited capital or the amount of capital lost to a whole bunch of different things absolutely dwarfs the amount of insurance payouts that have been made. And so the total was, I think, 34.4 million. 22.5 of that came from the Terra Luna collapse.
So this is from one company. So the other thing that I want to mention about this being funny is that this is one company's stats, and they probably put out a press release of their stats.
Yeah. So there's only a few like meaningful DeFi insurance companies, and I'm not going to try to list them because I'll inevitably leave one off. But there's a few of them. They're all really, really, really smart people. At least the ones that I've talked to. Many of them are actuaries, which is people that do the math on insurance type things. And it's actually a fairly well-established science, they figure out to a certain extent what the risk exposures are, what is the probability, of something bad happening. And if that happens, what's it going to cost? And if we had to pay that out, what do we have to do to prepare for that? Like, what are the premiums going to have to be? What are the, where are we going to get the capital from? And so on and so forth. And so what happens in traditional insurance is there's a lot of kind of aligned with what we were talking about with the banks, but they take all of these premiums in, and they obviously the premiums have to cover a certain amount of costs. But then with all of the cash that they have in reserves, they build a whole bunch of different duration investments so that in the event, so that they're earning some yield, so that they're increasing their capacity. But in the event that something catastrophic happens, as an example, and I'm using traditional insurance to highlight a point, but as an example, when Hurricane Ian happened in Florida this last year, many of the insurance companies, it was the cost was too much. So many of the insurance companies can't even stay operating in Florida anymore. So like our home and property insurance, we had to change providers. Our previous provider just stopped offering insurance. So it's even more difficult because a lot of that is somewhat predictable. You can't predict Ian, obviously. You can't predict how catastrophic it's going to be. But to think that there's not every decade or so going to be a catastrophic hurricane like that in the southeastern United States is crazy. That's going to happen, period. It's happened every year since the dawn of time. So
So what are we? What kind of event should we anticipate every year in crypto?
Well, yeah,
what is
that's
our hurricane in crypto annually?
So this is all leading to the fact that in crypto, if these adverse events happen, they are incredibly bad, right? Like you don't hear about hacks for 100,000. You hear about exploits, hacks, manipulations for 200 million or 50 million or 90 million. That means almost the entirety of the protocol is wiped out. And so that's if you're an insurance company, you have to have the assets to pay out whatever you're paying out. Where do you get those assets from? Premiums. In crypto, a lot of them have tried to create pools, right? They've tried to create pools where you as a depositor are the insurance pool and you earn a yield. And if there's ever a claim, then your pooled assets could be used for the claim. But the risk is so high that you have to offer, in order for me to put capital up, you have to offer an astronomically high yield, which where do you get the yield from? Right? Like you can't go and earn 100% per year yield or 50% per year yield on relatively risk adjusted or risk reduced investments in crypto. Like, there isn't too many of them. So how do you do that? And so that's been really the big problem is the limits, the maximum limits that these insurance companies can offer on any one particular protocol are reduced significantly. Like in many cases.
Open Cover also comments on this in a couple of the articles that you'll see. Yeah. And they're talking about the risk assessment frameworks. And this is the other component of pooling and high yield and high risk is we don't have an appropriate risk assessment because it's still an emerging technology. So if we don't have a standardized framework for this, which is like when you get auto insurance across North America, it's on a table and you don't have a lot of flexibility. We haven't developed that yet within DeFi. So they actually don't know what they're offering back to you.
Yeah, well, that is obviously a big piece of the problem is there's just no well-established models, right? And so it's very difficult to say to a depositor, 10% of the time you're going to get your investment slashed 10%, like depositor into the insurance pool, because there's nothing that they can say to actually validate any of that. They have no idea what the consistency of claims are going to be and how to prevent them and so on and so forth. And so they have these relatively low maximum amounts that each particular protocol can be insured. We've looked into this a lot for different platforms and different things. And there's a lot of really, like I said, really smart providers. It's just very difficult for even the biggest brains among us to figure out the mathematical model that this makes sense. And unfortunately,
they've broken this into categories too. And I just feel like this is relevant. So protocol loss coverage, stablecoin, DPEG coverage, et cetera, et cetera. But there's, of course, also always an other. And other is, of course, still the largest insurance grouping in DeFi because there are so many unknowns.
Yeah.
Right. So we're trying to categorize, we're trying to create these risk assessments. We're trying to use the big brains of our organizations or various organizations to calculate risk. We're trying to take lessons learned from traditional insurance. And then we are like, other?
Yeah. All this other stuff. Yeah. And that's the thing, right? So insurance is always like insurance adjusters. It's a whole industry, right? So once an adverse event happens, then you need to figure out what was the cause, who's at fault, and does that qualify for payouts? Well, if you're at the insurance company, you don't really want to pay out if you don't have to, but if you never pay anything out, then nobody's ever going to use you. So it's like, you have to start to create these frameworks, which is exactly what the space is missing. So there's so many risk vectors in blockchain because everything is so transparent.
And because nobody's consistent internationally.
Well, that too. Move
us on.
Segue.
The international crypto arms race. We don't need to get too in depth about any of the stories, but today there's 3 different stories, again, pegging America against Asia, which is super fun in light of non-crypto news coming out as well. So do try to take that with a grain of salt, the concept of FUD from your regular news feed and then how that might impact your crypto news feed. Because as people become more afraid of China, we will see more articles about how China is a world power, right? Like we will continue to feed ourselves in that fear mongering. And so one of today's articles is about China becoming the metaverse tech leader in 2023. Essentially, what all of these articles say is that China is leading in AI, VR, AR, and 6G, and ergo they will be set up to also lead in the metaverse. There are not any particular indicators about any of this, and there aren't any particular indicators about them working towards leading in the metaverse. In fact, quite the opposite. They're looking to regulate watching further, and by regulate, I mean step back from. So I think that this is a pretty funny article that is just pushing the rest of our fear mongering about China. What do you think, JD?
Yeah, I mean, either they're lying or the rest of the world is lying when they say that because China doesn't have access to the same silicon chips that the same advanced silicon chips that the rest of the Western world has via Taiwan, that this in fact can't be true. China, on the other hand, is obviously trying to position publicly that, you know, that they do have the capacity to do this type of thing. I don't know. I take this with a bit of a grain of salt, to be honest. I'm not sure really how I feel about China's competitiveness in the tech space. I think they definitely shouldn't be overlooked. I mean, they have one of the largest economies in the world, and they have a hell of a lot of people. And they have a communist government that can drive whatever ends they want to a certain extent without a whole lot of pushback. So, I mean, they can definitely be a lot more agile than most other countries if they choose to do so. Definitely something worth looking out for. Should we be afraid of it? I don't know. I don't think so. I mean, it's probably worth being aware of and conscious of, you know?
Absolutely. It's interesting to take this, though, about China and then think about Taiwan, because the other super arms racy thing today is that Taiwan, regulated by the Central Bank of the Republic of China, is looking to regulate crypto. So today they just announced that they're going to put together a body that is going to come up with regulation for crypto for Taiwan. And so now we have these two separate articles really pushing and saying that China wants that regulated.
Yeah.
But we don't have any actual proof saying that they're going to do it, they're going to support it, or that they have the technology to do it.
Yeah, it's worth bringing that up, I guess, because that's part of the point of the show is, you know, some of this stuff has some legs to it, and some of it beneath the surface, if you look close enough, you're like, wait,
pretty thin.
This doesn't make a whole lot of sense. There's not a lot of validation of what they're saying. Taiwan, I mean, following suit with the theme that we've been talking about, the crypto arms race, which is kind of funny. But, you know, Taiwan is just another one of the jurisdictions that's saying, hey, you know, we want to regulate crypto to make it welcoming. I think, again, hopefully this puts a little bit more pressure on the United States because, I mean, everybody's saying like, hey, the technology is impactful and there is a meaningful wind of change blowing in terms of how the technology underlays a lot of financial infrastructure. So instead of fighting it because we don't understand it, let's try to engage and try to figure out a way to, you know, to nurture this potential emerging market. And Taiwan is, you know, obviously has a lot of other concerns with China breathing down their neck all the time and all this other stuff. But it's nice to see another kind of Southeast Asian region or East Asian region, you know, take on crypto as a positive thing.
Absolutely. But I think some of these news articles, they're trying to get a whole article where they can just have bullet points. Like Taiwan's news today was, we would like to regulate. Taiwan's news was not, here's how we're regulating. We put together a group. We're not doing NFTs. Taiwan had a very, very straightforward single quote line. And yet you can find tons of articles, they weigh tons. You can find several different articles that are over 500 words long that are primarily conjecture or reporting something else unrelated, right? And I'm finding that that's the same with some of the American news that we're getting about all of our regulation. I found that that was the same about some of the DeFi insurance news that we just talked about. There's actually only one point of news, and the rest of it is conjecture and quotes. And in some ways, that's creating context. And in other ways, it's just getting a long enough news article to get paid. Like, I don't know.
Yeah, I mean, they got to fill it with something instead of it just being the headline alone. But anyways, we'll have to see. We'll have to see kind of if this continues, if we see more and more and more of these jurisdictions saying, hey, we don't know exactly how, but we're going to try to find a way. We're going to work with stakeholders, local stakeholders, and try to figure it out. Now, a nice contrast to this
Look at
is,
you.
look at me. I figured out how to do the banners all by myself. Another contrast to this is kind of the American Data Privacy Protection Act bill.
Act bill.
ADPPAB. Anyways, so this is another one of those like shoot first and like ask questions later. Like what? Like I understand why they're trying to prevent the like tumblers and all of these like ultimate privacy anonymity type applications. I get it because of money laundering. So I understand that, but you can't just have a bill like this that doesn't itemize what that actually means. Like, so what are you saying? Like, if this bill goes through, are you saying then that everybody has to be KYC'd? Like, is that the answer? Because maybe that is what they're saying. I don't know. And is that going to cause challenges throughout the space? Maybe, because there's a lot of platforms that, I mean, aren't properly structured for KYC, or how do you adapt, or what do you do to people that don't want a KYC, that have cash in your, anyways, it creates a whole bunch of complications that, again, it's not that simple. Yes, we don't want to have money laundering. No shit. So like, let's work with industry. Let's work with people in the space to figure out how can we do this in a way that we achieve the money laundering goal, the lack of money laundering goal, while at the same time, we don't completely put out the flame of a lot of this emerging innovation. And this one is an interesting one. I really, like, I don't know. Anyways, I understand like the data collection. It's kind of like GDPR in the EU in some ways. It's being expanded to crypto. A lot of this, I think, is again conjecture.
Yeah, I dug into this. I spent a few minutes this morning digging. So it's not like I've dug myself into a hole here, but I looked at a few different articles. I looked at a few different potential data acts that are going through the states. And the thing is that this isn't the only one. There's 6 or 7 that are sort of competing to see which one will come through first. And they're not identical, but a lot of them are addressing the same things. And the FUD surrounding this is basically people will be able to opt out of having to provide their data to retail providers. You know, so if you're looking at a Shopify store, if you're doing something e-commerce based, you can opt out. And they're saying that this will kill blockchain innovation because people will try to opt out of those types of transactions because there's a public record of them.
Yeah.
And something that people don't necessarily understand about opt out is that when you opt out of your data being collected, that often means that you also opt out of that service.
Yeah, effectively, you just can't use it properly, like especially if it requires your data, right? And what is your data and what is not your data is an interesting one too. There's really cool platforms. Quick shout out to
I was actually going to say Snickerdoodle's
a company called Snickerdoodle, which is building for that exact purpose. They're saying, hey, like in Web3. If data sovereignty is a big thing, you own your data, you can choose to share it, and you can monetize your data instead of the platforms monetizing your data without you having any benefit in that, which is what happens in social media and search and all these other platforms. That they're trying to democratize that, or at least create some sovereignty around that, so you have control. Again, I think, people saying that this is going to kill crypto. I don't think so. Crypto still exists in the EU. GDPR is pretty strict on what you can do with data and what you have to do in terms of what you collect and how you store it and how you allow people to remove themselves from the data sphere. Anyways, so I don't think it's going to kill.
Smart. Like, it will just ensure that people do their own research before they opt into something.
Hopefully.
Like,
or people
good.
Or most people will still just opt in all the time because so be it. Like, I mean, it depends. Some people are very concerned about their data. Yeah. I mean, if you want to use a platform, like, then you have to make that decision. Do I trust that they're going to keep my data safe? I don't know. What it might make difficult is being like an anonymous team. It might make a lot of this stuff difficult in crypto, and that could be a challenge. But I think, people, there is some accountability, I think, on behalf of the platforms and on behalf of users to understand what they're doing. And,
well, let's take a breath from FUD conjecture. Tell me about the UFOs on your shirt. That seems like a lot of unknown.
Merch shout out to our friends at Metis. We need Metis. I just think this is a cool shirt. Some UFOs.
Is it nice? Is it soft?
Yeah, it's not quite as nice as the Halburn one though. It's a little more cottony, a little less like cashmere-y feeling. But it is a nice shirt.
Like a merch madness bracket.
A what? A merch madness? Yeah. Look, like put them up against each other and yeah. I'm down both. I'm down, yeah. But we first need to get people sending merch. So if you're watching this and you have a platform, size medium, send merch, and I'll wear it. Rep you on the shirt or on the pod. Anyways, okay, we have a couple of
fails to clear up.
Couple fails.
First one is Bitcoin.
Yeah, I don't know if I feel that this one is quite a fail because we did voice some obvious apprehension to whether
I feel
Bitcoin
like it's
was
more like a Bitcoin community fail. You know, they're like to the moon, and everyone else said not even to 30K.
Yeah, it will be interesting. This is just the opposing argument, right? And I think it's important to share both sides, right? We talked about Balaji and his $2 million bet that Bitcoin's going to hit 1 million in the next 90 days. So I need to correct that. I said the end of the year. He said next 90 days. Yeah, apparently.
That's fast.
Yeah, so like they're expecting hyperinflation, right? Obviously, and the only way for that to work, hyperinflation does happen that fast. Generally, like it'll go from 10% to 100% to 10,000% within like 5 months. But I guess this is just the opposing argument is that, a lot of people are looking for safety and short duration treasuries. You could make an argument that in the event of hyperinflation or inflation in general and interest rates going up, that even short duration treasuries aren't the greatest because it's still denominated in fiat, et cetera. And if the fiat devalues, then you've got problems. So, I mean, there's arguments on both sides that are valid, which leads me to the same conclusion that I always have is that we have no idea where it's going to go. And this is all just speculation and conjecture, as we've said many times. Mm-hmm. But yeah, it's if it breaks through 30K and keeps going, then all bets are off. I don't know what to think at that point. I find it very hard to believe that it's going to get, even with, I don't think we're going to get to crazy out of control hyperinflation in America, which is unfortunately the tail that wags the dog for the rest of the world in terms of Bitcoin and just macro economics in general. But if we do, then of course that's possible. I don't think it's happening. And if we don't hit hyperinflation, it doesn't mean that Bitcoin's just going to dump. Like it's still going to be seen as an uncorrelated asset by enough people that the price may still rally. Who knows? It may dump. People might just risk off. Like all it takes is one major asset manager to start the cascade, right? So if you have someone like Grayscale that for whatever reason, or what's his name, Saylor, Michael Saylor, if for some reason like he gets ousted from the board, or I don't know. I don't know enough about that to make a meaningful comment, but anything can happen. They go into receivership, they go into Chapter 11, like whatever. And if they have to liquidate their Bitcoin, I mean, that's billions and billions and billions of dollars worth of Bitcoin. I mean, that will start the cascade. And then you get shorts, and then you get all of these other things that compound the effects, and it just becomes a big problem. So who knows? Really, could it go parabolic to the upside? Sure. Is it probably going to be choppy for a bit? That's probably where I sit, not financial advice at all. Don't follow my financial advice.
Yeah, we also don't have insurance advice or legal advice at any time.
None of it, yeah. But I mean, on the downside, I also think that's probably pretty unlikely that it's going to just dump to oblivion. I don't see a lot of those assets being liquidated. If they are, they're probably going to be carefully liquidated, not like in Chapter 11 or something. They're probably going to liquidate them strategically, I would assume. I don't know. So yeah, we'll have to see. We'll have to see what happens. The other misstatement of mine.
Final
Final fail. It's more me fail than anybody else. But I misstated a little bit when we were talking about Euler, however you want to pronounce it. So we'll talk about kind of the what's happened here recently. But first, I just want to correct the record, so to speak. They offered a $1 million bounty, not to the hacker or to the exploiter, but rather to anybody that had information leading to the arrest of the hacker. So I went on this huge monologue. My point still actually is effective there, but I went on this huge monologue about fencing and how you get only a certain percentage out and all this other nonsense. And $1 million on 200 million is 0.5%. I mean, that's far lower. That turns out that's not what we did, but that's not what they were offering.
No, but I mean, we talked about it because they were offering 1 million as a bounty if you knew anything about them.
Okay, I thought I misstated that, so I was like super concerned. I was like, oh my god, we got to correct this.
We have a meta fail where we said the right thing, but yeah, we talked about it. We talked about it quite specifically where so they were offering the hacker 20 million, keep 20 million, but if you were going to have any tips with the hacker, that was worth $1 million. And we were also discussing that $1 million wasn't enough to give up your degen buddy who might send your funds back.
Well, yeah, right. Like, but I mean, even the IRS in the US has if you know people are avoiding tax, like I think it's 10%.
Yeah,
it's like a pretty high amount if you rat on your friends.
Yeah,
I mean that's kind of ridiculous, but I mean people obviously do it. They wouldn't be offering it if it didn't work. Anyways, so kind of funny. There's not funny, but typical, I guess, that that the hacker's obviously trying to be anonymous in this particular case and cover his tracks. So he sent an on-chain message to the wallet of Euler saying, "Hey, let's try to find a way to talk." I'm paraphrasing here. They have no intention of keeping what's not theirs. That's complete and utter nonsense, in my opinion. I think they're realizing that it wasn't as easy to get the money out now, especially with all the eyes on this as they thought it might be. Then they sent a little bit of the assets to a North Korean wallet. Red flag North Korean wallet. I don't know. There's a few things that just kind of go, they're probably realizing it's not as easy to get away with this as they thought. Maybe there's, law enforcement is on their heels, or they heard someone's going to tattle or something, and they're trying to figure it out. Either way, best case scenario, they want to talk with the Euler team in like some controlled environment somehow and try to figure out how to make things right. So I would just hope that we see some sort of resolution here. There's a lot of people that were impacted by this. As I said on the stream, whenever that was last week, I think, Euler is a great team. Like it's a really novel but amazing concept for Borrowland, and just the whole structure of Euler is pretty amazing. So silver lining, hopefully their community doesn't completely get crushed in the end.
This is a real FUD Tuesday.
Yeah. So funny.
We had a lot of conjecture, a lot of uncertainty in our news today. Really FUD Tuesday.
What are we sure of? We're sure it's Tuesday. That's about it. Everything else, everything else, you just gotta pay attention and figure it out.
Okay, well, subscribe, hit the bell.
Atta girl. Like, subscribe, hit the bell, follow,
comment,
do all that shit.
What else you want to know, or fact check us if we effed up. Obviously, we're willing to admit those fails, but we need to know. So,
perfect.
Go FUD yourself, JD.
Go FUD yourself, Kiara. Have a wonderful day. We'll talk to you guys tomorrow.